The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, after a period of explosive growth and speculation, the cryptocurrency market is entering a more selective and mature phase. Bitcoin continues to hit new highs, buoyed by institutional adoption and a robust ecosystem of regulated products, while the altcoin landscape tells a more fragmented story. As the traditional notion of an alt season evolves, or perhaps fades entirely, it raises important questions about where the market is heading. What does this shifting environment mean for the future of altcoins then? And are we seeing the rise of a new kind of investor strategy that favors utility, regulation, and liquidity over hype? And most critically, how should analysts and investors navigate this new terrain? Well, to find out more, joining me now is Valentin Fournier, who's a digital asset analyst at BRN. Valentin, welcome to the show.
Hello, everyone. Very happy to be here.
Thank you so much for joining us. Valentin, altcoin performance has been a mixed bag following the U.S. elections, while Bitcoin hit new all-time highs in November. How do you interpret the current divergence between Bitcoin's performance and that of most altcoins?
So lately, altcoins have been outperforming Bitcoin, notably Ethereum with a 70% surge and Solana with a 40% price increase, while BTC saw an already massive 25% bump in price. This return of inflows towards smaller caps shows the return of a strong investor's confidence into the market now that the tariff war and inflation pressure are decreasing. And both of them are moving in the same direction, which is the ideal scenario for altcoins. And as we expect the rally to continue with potential dips along the way and to end with a rotation of capital towards smaller coins, which would mark the peak of an alt season.
Right. Well, despite this divergence, altcoin trading volume has surged since November, signaling a lower regulatory risk premium. In fact, altcoin volume dominance relative to Bitcoin has climbed to levels not seen since 2021. What factors do you believe are driving the increasing concentration of liquidity among only a few altcoins?
So the concentration is driven by several converging factors: a clearer regulatory signal favoring certain compliant projects, institutional investors focusing on liquid high-cap altcoins, and macroeconomic conditions that encourage risk-averse behavior. And at the same time, a flood of new tokens has hit the markets, many of which are trading near zero. And the cause of this is structural as much as psychological. So new tokens often debut with minimal liquidity and no organic demand. And as early trading fizzles, investors are pulling out, or they are now not even entering the market, which reinforces the perception that these tokens are unviable. So in a market with increasingly dominated by cautious capital, this lack of conviction becomes destiny. This has led to, as you said, liquidity clustering around a handful of altcoins with strong fundamentals, regulatory clarity, and proven use cases, leaving smaller or less compliant tokens completely sidelined.
Well, Valentin, do you see the recent shift in trading volumes as a temporary pause or part of a longer-term structural change in the crypto market then?
So this shift appears structural rather than temporary. The maturation of the market, the increasing institutional involvement, and the evolving regulatory frameworks are reshaping capital allocation. Future altcoin rallies will likely be narrower and way more selective, concentrating on a few tokens with strong fundamentals and institutional support, rather than a broad-based speculative surge.
I mean, how has institutional involvement then reshaped capital flows in the altcoin space compared to previous market cycles?
Institutional involvement has brought greater scrutiny to fundamentals, liquidity, and now recently regulatory compliance. And unlike past cycles, which were dominated by retail speculations, institutions prefer assets with a clear use case, deep liquidity, and that regulatory clarity. And this has led to more stable capital flows concentrated in a smaller group of altcoins, and increased interest in regulated investment products like ETFs, which are seeing continuous filings for smaller and smaller altcoins.
Then what role is retail sentiment currently playing in altcoin performance, and how does that compare to past bull runs?
So retail sentiment remains a factor, but it is now more measured and influenced by institutional trends. Unlike past bull runs, which were characterized by a widespread retail FOMO driving speculative altcoin rallies, the current retail activity tends to follow institutional signals and focusing on larger cap or narrative-driven altcoins rather than complete indiscriminate buying.
Right. Then, just to delve in deeper here, what do recent altcoin ETF filings signal about institutional appetite?
So recent ETF filings indicate a growing institutional appetite for regulated liquid exposure to selected altcoins. These filings reflect confidence in certain projects' compliance and market viability, and they help mainstream investors gain access to altcoins through familiar regulated vehicles, which further concentrates the capital.
So, with liquidity becoming more concentrated here, Valentin, what should traders consider when evaluating new altcoin opportunities?
Well, traders should prioritize altcoins with strong fundamentals, regulatory clarity, and sufficient liquidity to support stable trading. They should evaluate order book depth, trading volume, institutional interests, and the compliance status is also critical to see these institutional flows.
All right.
Overall, caution is warranted with low cap tokens because they carry a higher liquidity and volatility risk in this current environment.
Are there specific indicators or data points you track to assess altcoin liquidity and investor confidence?
Key indicators will include trading volume, market depth, on-chain metrics like active addresses and transaction volume, ETF inflows, institutional holdings, and regulatory news. And monitoring these will help coach liquidity health and investor sentiment toward these altcoins. But another very important thing is to read the white papers and make sure that the project's activity is not entirely generated by points farming or other incentives to evaluate the fundamentals of a protocol.
Well, in your view, how have rising interest rates and policy uncertainty impacted altcoin capital allocation?
Well, rising interest rates and policy uncertainty has heightened risk aversion that pushed the capital toward more liquid and lower risk assets. Where, like, on the overall investment world, it has been through like bonds and lower risk stock, but also in the digital asset world, it pushed the capital toward Bitcoin and a very few group of altcoins. And this environment is discouraging speculative bets on smaller, less proven altcoins, which leads to a more cautious and selective capital allocation. However, with incoming rate cuts and the more favorable macro environment, this trend could reverse in the coming month, and what we're seeing now could be the beginning of it.
So, Valentin, overall, are we moving toward a new paradigm where a widespread altcoin rally is less likely, or are altcoins set for a broad rally?
So we are definitely moving toward a new paradigm where broad-based altcoin rallies will become less frequent, or at least way less likely than before. And instead, the growth will be concentrated in a small set of high-quality, liquid, and institutionally supported altcoins. And while pockets of altcoin strength are likely to emerge if narratives like AI or DeFi are completely overtaking the markets, a widespread rally like in 2021 is not probable under the current market conditions.
Okay. So what traits or metrics will define the, so-called winners in the next phase of crypto growth?
Winners will be defined by the strong real-world use cases, the regulatory compliance, the high liquidity, the institutional adoption, a sustainable tokenomics, and active developer engagement. Projects that integrate emerging technologies like AI or real-world assets tokenization may also gain an edge, as these narratives are highly followed by institutions.
So how would you advise investors then to approach altcoin exposure in a market that is increasingly rewards selectivity?
So while highest multiples will only be reached on newer tokens with small market caps, finding them before they explode is highly unlikely, and most of new tokens launch are heading to zero quite rapidly. So what investors should do is to adopt a selective approach, focusing on altcoins with robust fundamentals, regulatory clarity, and proven liquidity, and diversifying within top sectors like DeFi, AI, and real-world assets while avoiding exposure to speculative small caps will help them manage risk and position for sustainable growth.
All right. Well, thank you so much, Valentin, for your time and your insights today.
Thank you very much.
Thank you. That was Valentin Fournier, who's a digital asset analyst at BRN. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.